This concept here came to me by complete accident. However, it wasn't without a lot of conceptual thinking for months and months and months. And I sort of put two things together. It was like, oh, okay, well maybe this will work. So let me just break all this down. Let's just talk about the actual chart itself. Forget about this indicator down below. On this chart is obviously some bars, and there's this moving average. This is one indicator, and it's called LinReg candles, and it is put together by this person. Uguru Vu. Is that how you say it? Uguru Vu, something like that. Anyway, there's the person's name. Linear regression candles. It's an open source script, which is fantastic. There's 178 comments, so go through them and you work it out for yourself. Now, I've been looking at this indicator for a long time, not just today or last week, but for a long time, and how to incorporate it. And I just thought, you know what? I wonder what this would be like with Renko bars. So this actually is Renko bars. If I turn off this LinReg candles, so there's Renko bars. If I could find a way to trade Renko, I reckon I'd be a millionaire within a year. But I have not found a successful way to stop my losses. That's basically it. I mean, getting these big runs are awesome, but how do you combat all these little pullbacks, all these nooks and crannies? It's so difficult to navigate yourself around Renko. These Renkos are stock standard to TradingView. Here's the settings. I've done nothing to them, okay? And this is a 1 minute chart on crude oil. I only trade crude oil these days. That's it. I did try some other things and was hugely unsuccessful. So here's Renko on a 1 minute crude oil chart. Right, so now what I'm going to do is put on the LinReg candles, and you can't trade it. Visually, you just look at it, you just go, I can't work this out. So what I thought was, well, how about we actually turn off the Renko bars, so we now have LinReg candles with the Renko bars. It's really confusing. I don't know how it's working. I really don't understand it, but it just is. And so straight away to me, visually, it's like, you know what? I reckon I'd have a greater chance of success with trading this. It looks smoother, and it just looks cleaner and on every level, okay? Now, I just want to go on to say that this is backtesting printed results. I have not traded this live this week. I will need a few days to actually look at this live, because there is issues with trading this live in regards to where the price sits and the bars sit. I don't want to get into it right now. But so this video is just based upon the printed results that have happened, obviously, from now and all the way back as far as you want to go. So how do we trade this thing? Well, really, when the bars are green, and to me it goes above this LinReg candle indicator, you go long, and you go short when it's red, you go long, you go short, you go long. It's like that's the way we do things. However, like everything else in trading, I reckon it's 50% it works and 50% it fails, okay? If you were to trade every little whip, you would probably end up breaking even or at a loss. So how do we combat this? How do we filter out the noise? I'm still working on it, but this is the concept that I've come up with so far. Now I have tried a lot of different things. I have tried the CCI. I have tried. I've tried a lot of different things, and this morning I've been playing around with this thing here, which is called Traders Dynamic Index. I have made a video about this. Here's the script. Traders Dynamic Index, and this one is made by Lazy Bear. Okay, you can go on, there's a lot of information all about it. This one's made by Lazy Bear, and all I've done with this, I think, I just forget, is these settings are exactly the same. I've just turned off the plots. So the plots are Bollinger Bands, I think. And I've also turned off those plots. Okay. Now, there is another one. I think it's made by Uncle L. Traders Index. Let me see if I can find it. I can't find it for now. Maybe I'm thinking of something else. Anyway, so we're looking at this one here. So how do we trade it? This is a 1 minute chart of crude oil. Okay, this is from last night. So using the Traders Index, and if you know, I just trade the UK and the USA session. This blue box is the Asia session, which you generally don't trade. So this is a Renko based concept using LinReg candles. It's weird, but it works. So far it's working. Who knows, maybe next week it'll fall over. So how do we trade this thing? First, let's start with this Traders Dynamic Index. For longs, we're looking at longs only. When the green line goes above red, that's a signal to maybe go long. However, when the green is above red and then it's above this orange yellow, we go long. Okay, and you can see straight away at the start of the UK session we would have gone here and had a very successful trade. Okay, when do we get out? I would get out at any change of any crossover, whether it would be on the chart or actually on this Traders Index. Okay, so as you can see, the market went it started to short. And so when do we go short? Well, what I would be looking at is the green goes under red and then it also goes under the yellow. Now right here was a very debatable situation. You know, we could have gone short there. Okay, so this is one of the big conundrums, is how do we filter that out? You could do this. You could put, I think that's a 34 EMA to help you filter out some of these false signals. Okay, but that itself is not without its own problems. Okay, let's just focus on this. So we didn't take a short, so now we're waiting for green to go above red, and of course it's all above this orange, so there's our next long. Now you could wait until price comes through the LinReg candles line to go long. Okay, of course you get out at any sort of crossover. Now here's the conundrum that I was talking to you about. Do we go short here? Well, if it's based on the Traders Dynamic Index, yes, because have a look. The green has gone below the yellow line. So let's just say we took a short. So now let's take off this 34 moving average. Okay, so we might have gone short here and we might have had a loss. This one here we had a win. I'm still working on this idea of how do we filter that out. Okay, so of course we get out whenever we can, which is probably just there. You might have broke even there. I don't know. And of course, when do we go long? Well, this green has gone above red and has gone above the Traders Index line, and then we go long. And this long was just ginormous. Of course, you might have got out here. Okay, you might have got out there, but what I would be looking at is it's quite a long way away from the yellow line, so I would just be eyeballing this, and obviously if price comes below this moving average of the LinReg candles, well, then you get out. So right here there was a short. Okay, and what happened? The green line went under the Traders Index yellow line and we go short. Straight here there was this green went over red, but it didn't go over the Traders Index line. So what do? You could go short. Okay, and you can get where I'm getting at. So now the market is saying we are going short because it's now turning over. So you would have stayed short, and that was oil last night. Huge profits. Even if you included this loss here, let's just say you had a $20 loss, you would have picked it up. So these are very early findings of this idea. I need to trade it live. Doing printed results is really easy to backtest. You could do it, but trading it live, I think, is going to be a different kettle of fish altogether, because there is an issue, as I've mentioned, with price and how it's printed and where the actual bars are. I notice there's a discrepancy of about 10 cents, and I'm still trying to get my head around that, or a work around that. But on first glance of this idea, it's very strong. It's the strongest that I've seen in my trading career, and the simplest visually to maneuver. I'm sure there's many other different combinations of indicators to use. I have gone through a lot, and I have a lot here. These are all my favorites, and every idea I test with all of these. Okay, I go through them all, and then I try different combinations, and you can imagine just how long this is going to take to do. There is another idea which incorporates the Kaufman, the Karma indicator, and I've yet to do a little bit more testing on that. That has proven to be pretty good. I'll just quickly run you through that. So just you could include this Traders Dynamic Index, but the Kaufman seems to really keep us in check. Yet again, we still have this issue here of it breaking through, but and up here as well. But this is where you could use the Traders Index and the Kaufman, whatever it's, and you could use this in combination. If you use the normal moving average, it's a little bit different. So that's a 34, where the Kaufman, whatever you want to call it, is a little bit different than most moving averages. Let me just turn that off. But there's a lot to sort of take on board, because the Kaufman, while it's good, you still look at this trade here. You're still you're 15 cents out, and that's a lot to sort of lose before you even enter a trade. But then you pick it up on the downside, and it sort of outweighs itself over the course of sessions. It's very, very interesting. There's a lot of parts to this, and I just think it's going to take a lot more time to sort of just go through things. But just forget the Kaufman for a sec. Based on this Traders Index and all of that, it's a really good foundation to start from. Go and back test this and see what you come up with. You might have some other ideas, and if you do, please post them down below, because this channel is all about sharing. Don't hold the information to yourself. Share it out, man. Okay, good luck. Practice this over the weekend. See what you come up with.